Good afternoon, everyone. Once again, you're all welcome to today's meeting. Thank you all for joining us today. Yes, we have on board Dr. Tawamiz Usman, and he is our speaker today. I'd like to give a brief introduction of Dr. Tawamiz. Dr. Tawamiz Usman holds a PhD degree in International Financial Law from Ahmadu Bello University. He is a fellow of the National Association of Insurance Commissioners, USA, and an honorary member of the Louisiana Department of Insurance, member of the Nigerian Bar Association, Commonwealth Lawyers Association, Nigerian Institute of Management, Certified Pension Institute of Nigeria, and Chartered Insurance Institute of Nigeria. He worked as a senior attorney with the Katsina State Ministry of Justice and the Federal Ministry of Justice before joining the National Insurance Commission, and has been an insurance regulator since 2002. And currently, he is the legal advisor and head of liquidation and compliance of the National Insurance Commission, NICOM. He was actively involved in the Commission's Market Development and Restructuring Initiative, MDR, insurance sector, a project that led to the evolving of the regulatory framework for enhancing financial inclusion related to insurance in Nigeria. As FITC IFC trained corporate governance trainer, Dr. Tawamiz has actively been involved in training of board of directors of companies of good corporate governance. Currently, he is a member of the technical committee of IFSB based in Malaysia and the legal and enforcement subcommittee of Nigerian Financial Services Regulators Coordinating Committee. He was a member of Legal Implementation Committee of the FSS 2020 and the Committee on Insurance and Pension of the MBA SBO. Please join me in welcoming Dr. Tawamiz Usman. You're welcome, sir. Dr. Tawamiz Usman, you're welcome, sir.
Dr. Usman, we can see that you're not on mute, but we can't hear you if you're trying to speak. Please go ahead. Seem to be having some teething problems. Just bear with us a second. Mr. Usman, could you try again? I saw you went on mute and then took it off mute. Dear colleagues, please bear with us as we resolve Dr. Usman's technical problem on the site. Just please bear with us. Excellent. We can see you now, but we can't hear you yet.
Can you hear me now?
Fantastic. We can hear you.
Yes, we can, sir. You're welcome, sir.
You can hear me now.
Yes, I can say.
We can.
Yes,
But
you can
have
hear me.
2 phones on or two things connected. So you need to put one on mute.
Yeah, I have to put one off. Leave this one. Am I okay now?
Excellent.
Wow.
Thank you.
Okay. Oh, okay, good. Thank you very much. And I need to appreciate the opportunity to join to share perspective on from the regulator's point of view. And I believe I'm not to present a paper in real sense, but rather to join the knowledge sharing. Is when we talk of like a presentation, is like you are now trying to convey to people that probably they need to know something. But in this context, my perspective is to share knowledge on what most of the participants must have a grasp of, but to present it from the perspective, from the regulator's perspective. And like all we know, we all know the role of the regulator, which is principally true as far as the insurance regulator is concerned. One is the issue of that of regulation, and the second one is that of supervision. The regulation is to play the role of what we popularly call the goalkeeper. You determine who comes into the sector and also set the rules that for those who are allowed to come into the sector as part of the players within the sector. And the role of the regulator in this context, as far as the regulation is concerned, is on the issue of licensing, registration, authorization. The law makes it clear that no person is allowed to operate as an insurance operator unless and until he has the approval of the National Insurance Commission. So that's within that context. And that's the role of the regulator. And in the process of that regulation, you issue various in terms of regulation, what we call guidelines, circular, policy direction. Those are all the functions. Then the next one, as far as the role of the regulator is concerned, is the issue of supervision. Supervision is to see to what extent the level of compliance in terms of the laid down rules, extant rules. So that's the second function of the regulator. And the main objective of those that the regulatory and supervisory function is to ensure the main one is to ensure the protection of the policyholder. And then the second aspect is financial stability. And then the developmental aspect of the sector. So in that, we must know that we have category of operators. We have the underwriters, that's the insurance companies, which include the reinsurance. Those are the main underwriters that provide the main business of insurance as far as covering the underwriting of the risk, providing the insurance cover. Then there are other ones that is the intermediaries, which include the brokers, insurance brokers, which their role is to place business and perhaps their professions. They act on behalf of the consumer, not the underwriter. And then there are agents who are, based on the law of agency, they are agents of the insurance companies. So they are vicariously liable on anything that they do as far as their principle is concerned. And but there are instances where the broker will metamorphose into an agent of the insurance company. For example, where you paid a premium through a broker. The law deems it that the moment you pay the broker, you have paid the insurance company. So in that context, the broker has turned into an agent of the insurance company. And because we all know the policy, the rules, the law in terms of no premium, no cover. When there's as a condition precedence that you have to pay the premium for a valid insurance contract. So even if the money has not reached the insurer, the moment you pay the broker, you have satisfied that requirement of law. There are other ones that also the regulator that needs the approval before they operate. These are loss adjusters, where the loss adjusters are the ones that when there is a claim, they do assessment on the extent of the quantum of compensation to be paid in terms of general non-life insurance businesses. So those are the aspect in terms of the regulation. In terms of supervisions, there are returns, there are inspections that are conducted to ensure the companies are doing well, and also the interests of the policyholders are adequately protected. We know the main crux of the underwriting is the ability to pay claims. Where an insurance company is unable to pay claims, that defeats the whole essence of insurance. And that's where the role of the regulator in terms of determining who comes in and also how they do their businesses. The main, my focus on discussion today will be on the most recent developments in terms of this regulatory function. The first one that I may have to discuss on is on the issue of governance. We know the companies survive or die based on the kind of governance structure they have, and which is key. From experience, some of the companies went into liquidation because of the poor corporate governance. And that's why, as National Insurance Commission, we are so serious when it comes to the issue of governance structure and the architecture in terms of individual companies, taking into consideration the nature, the complexity, the nature of businesses they underwrite. So we started a new development in 2021 with the issuance of the Code of Corporate Governance. That was the follow-up to the NCCG issued by the Financial Reporting Council. And perhaps, and one thing that is very key in the Code of Corporate Governance issued by the Commission, which is a sectoral code, which is intended to ensure a reasonable, a fair, a good governance structure and culture within the insurance sector. It provided for so many aspects, the minimum number of directors required on the board, which perhaps is a minimum of 7 and maximum of 15. And also the composition, define the composition, which requires there must be an independent director, which has no share in the company. And also the at least 40% of the composition should be a executive director, so the on the board. And also one of the things that was clearly highlighted was the issue of qualification and the expectations of the board members, and also even in terms of some level of independence. And that is why the code clearly made it mandatory that the chairman and the CEO shall not be members of same family, whether close family or extended family whatsoever. And so that's the essence is like the main NCCG, which was persuasive, and also expect the issue of sectoral codes, is to ensure that the boards are replenished from time to time, freshen up, so that there are new ideas will come, and also limit the essence of familiarity. You know, the more you stay on the board and clear, the more the essence of the board is defeated, because it becomes like a normal routine that we know ourselves, we can sort things ourselves, and that will not help a company. And that's why those rules. And one key thing that is in that code is that all non-executive directors shall not stay for more than 3 terms of 3 years, which is a maximum of 9 years. And we have operated that one successfully, because the excellent law requires that for any appointment on the board, prior approval of the commission is required. And even appointment requires the same approval of the commission. So we keep tab on the governance structure of the companies, of the operators. Now, one thing that the most recent development in terms of the governance of insurance companies and reinsurance is the circular issued in December, which takes effect from 1st January this year, that the executive directors and the managing director, the chief executive, shall not stay for more than 10 years, except in a situation where executive director has been in the company and then transmuted into the managing director. In that circumstances, the totality of his stay as executive and MD shall not exceed 15 years. And the issue is very clear, that there is need to inject new people and new ideas. Otherwise, it will be a business as usual. And the more it is not like, we all know insurance companies are not like normal trading companies, so buying and selling, but this has a third-party interest, third-party huge liabilities, and one of the funds being maintained by the insurance and reinsurance companies are the policyholders' funds, and so it is not like companies selling cars that if is winded up, it folded up. The only thing are the shareholders, if there is no asset to get the investment, they lose. But in these circumstances, the policyholders who are not part of the shareholders, they are not part of the management of the company, they are going to lose. So that's why we evolve this particular rule to ensure that there is change of management from time to time. And in the course of that, you could see it will introduce new ideas in terms of business mix, business drive, and even investment mixed. Because one of the issues that we had recently with 1 or 2 companies is the fact that they had problem with investment mix, their asset mix. And that was because of the board decision where to invest. This is one of the companies has the problem of settlement of claims, which is ended up being a huge claims. But the company has sufficient asset cover. But they have the problem of liquidity, which is the key thing as far as the insurance business is concerned, because you get claims anytime and you have to settle claim. And one of the regulations we issue in the financial prudential guideline is your business mix. So when we did the inspection, normal examination, we realized they have that challenge. And we tried to right the wrongs, but because probably the limited perception of the board could not turn around the company. So we had to take some hard decisions on the company. So that's the rationale of why one of the reasons why we have to set time limits for the executive directors. The non-executive director has been in operation since 2011. And this one, they have, those who exceeded the 10 or 15, cumulative 15 years, they will have a moratorium of 12 months, within which to serve as a transition period, within which new chief executive or executive directors will take over, and those ones subsist want to exist. So that's a very key thing, and it's not only peculiar to the insurance sector. We know even in the banking sector, there is that limitation on period which you executive director can stay, and because we have to issue sectoral regulation. CAMA has no limitations, so when you can be a director, which and also even the NCCG did not provide for time limit. So that's one milestone achieved as a recent development in terms of regulation of the insurance sector. Another key area that is very new in terms of new development is the issue of premium payable. You know, the law says one of the functions of the commission when you look at the NICOM Act is approve rate of premium to be charged on all classes of insurance business. And we notice in the course of examination, so the intervention in terms of examination, investigations, and also inspection. Sometimes some companies do not charge commercial premium. And if you don't charge economic premium, obviously you may not have sufficient funds to invest. When there's a claim, you'll be able to pay. And we know how insurance business operates. You don't charge 100% of the value of the asset as premium. No, you use the principle of a large number based on actuarial analysis that the likelihood of occurrence of a risk, let's say it's 10% likelihood. So if it is 10%, you need about 10 businesses to charge them 10%. When there is that 10%, you'll be able to pay claims, because based on that analysis, not all the claims will not come at the same time. And also, if you didn't charge that realistic, that economic premium, what it means is when there is a claim, you won't have the money to pay a day. And that's one of the key areas we realize is affecting the companies that are having challenge to pay claims. To the extent some sees claim as a complaint, which is not at all, because claim is the main crux of the business. So why even I made a claim, somebody will see like I'm making a complaint? That is not. That is, you are now perfecting the entire business. You are coming to fruition of the business. So now we issued a circular which also took effect last January, 1st January of this year. And we now set for motor, because which is the most common form that affects a lot of people. We set a minimum premium of no less than 5% of the value of the car. And what it means, if you are charging 5%, I mean, you are now working on the likelihood of claim is 1 in every 20 cars, which perhaps may even be higher. But because it may not come at the same time, when you charge, that's what we see can be adequate enough to invest and be able to pay claim adequately and promptly. These are the two issues. It's not only you pay the claim, you have to pay adequately, compensate the claimant. And not paying the adequate one is not enough. You also have to pay timely. Timeliness is very key. if you have a claim on motor vehicle that is accidented and you didn't get compensated until after 6 months, to a large extent, the essence of the insurance is defeated because you want to be taken back as quick as possible where you were before the accident, before the occurrence of the risk. So that's why we issue this circular, which takes effect. And we're happy people will be able to appreciate the rationale behind that. And within that circular also, we now set increase the losses. You know, there are two categories of motor insurance. When we say comprehensive, that's voluntary. You choose to take it because it is your entirety of your liability is being insured, which include the liability of the third party and yours also. When there is a claim, is not only they will also fix your car. For example, in a situation where there is an accident involving your car and another person's car. So when you have comprehensive, the insurance company will compensate the third party and also put you back to where you were. The other one is the third party, which is the most popular. Everybody said, I just have to take it to show the police. The one will pay 5,000 and to, unfortunately, majority of people don't seem to understand the value of that insurance. That insurance cover is very key and very important because one, the government at the same time have responsibility to protect its citizens. But it cannot say because if you drive a car, there is a likelihood that you are going to knock somebody or you are going to destroy somebody's property. So don't drive a car. No, drive your car, but have a protection, not for yourself. It's your choice. If you like, you protect yourself, but you must protect the third party. That's why the law says no vehicle should be put on public road without having a insurance to protect the third party. And the law says is the National Insurance Commission that will fix the minimum premium payable. And for long, it has been fixed for 5,000 for cars, 15 for trucks, and 2,000 for motorcycles for a long time. And people are comfortable. They go and buy from anywhere, whether fake, genuine or not, because they don't see the value. So we realize companies are having difficulties to pay claims because, so that's why we rely on the provision of the law and now increase the minimum premium payable to 15,000 naira so that the companies will be able to pay claims. And also, not only the premium that has been increased, but also the scope of the liability in terms of property damage. When it was 5,000, the maximum property damage was 1 million. And we know with inflation, 1 million is no longer really a very big money in terms of fixing somebody's car. So now the liability by the circular that took effect on the 1st of January this year, the liability in terms of property damage is maximum of 3 million, which is reasonably, we see it as a reasonable increase commensurate with the premium increase. But we also have to note that if you look at the circular, you realize no mention is made about medicals, health, and death. That one cannot be fixed by way of circular. It depends, it varies from person to person, and the extent of the liability as it relates to the disease in terms of death or medication, cost of medication. So that one is case by case basis, which technically has no limit. So this is a very key area that is we have recently issued a new regulatory architecture, and those are some of the key areas. Like I said, the main thing is for me to trigger a discussion, and that we can, at the end of the day, have some knowledge sharing. And I think I may, if it is convenient, I can stay here and stop here, and then wait for further discussion as we move on. Thank you very much.
Thank you very much, sir, for that discussion. Really appreciate that. So we have on board Mr. Kamal Ratri, who is the chairman of the insurance committee of the FBSBO. Mr. Kamal Ratri, sir.
Yes, good afternoon, everyone. The committee is the Insurance and Pensions Committee. It's one of the committees created under the section of business law of Nigerian Bar Association. Our committee is meant to deepen knowledge of a specific area of interest and to encourage interaction between the market players and the legal practitioner. In many instances, we have intervened in areas where we have complaints from the stakeholders. And some of these have led to changes in law and changes in policy decisions. We also do some seminars to educate our members as it affects each individual. To say, we encourage insurance companies, brokers, and other players in the insurance industry to have lawyers within their midst and to take advantage of some of these services that we provide for the industry. We are, as they say, we are open for business and will assist the Nigerian stakeholders in what section of the economy that SBL has had its committee. We're at this junction, without taking much time because of the prime time that we are in, we would like to encourage people to ask questions, because this webinar provides an opportunity to get a direct answer from the regulator. And I don't want us to miss this opportunity. You can ask questions that you wish that has been bothering you along the way. Everybody is welcome. Thank you.
Okay, thank you, sir. To coordinate the question and answer session, we have Mr. Akin Omishade. Mr. Akin Omishade, you're welcome, sir.
Yeah, thank you, Madam. Thank you, Nimata. Thank you very much. Good afternoon, everyone, and welcome. And thank you, Dr. Talmiz man. I have a question before I open the floor to everybody. And it has to do with two positions, the regulatory position and the issue of claims. So, Doctor, you mentioned about the regulatory position of NICOM. Sometime last year, there was a publication about some insurance firms whose certificates had been withdrawn. And my question regarding that is, what's the protection of the insured in that scenario? Now, as lawyers, we'll be advising clients, we'll be advising some of these insurance companies. Some of these insurance companies are also part of the consortium of other insurance companies. How, as a regulator, how are you stepping in to ensure that outstanding claims are now settled? the respect of regulation. And then when it comes to the settlement of claims, what is the time period between that the regulator puts forward for when a complaint is lodged against a repudiation of a claim or in settling a claim to when it is actually settled? I know from experience that there is also the adjudication panel. It would be good to know that usually maybe it will take about 12 weeks, it will take about 14 weeks, so that as practitioners that interact regularly with the regulator, it will take about 4 weeks, it will take about 6 weeks, because there's nothing there that is confirmed in any of the publications. Thank you very much, sir.
Yeah, thank you very much, sir. This is really a very apt questions that we as lawyers, it will really help us, and also it will give us opportunity as regulators to show the perspective we see those issues. Let me start with the issue of the companies that were cancelled. Let me start with saying that the last thing that a regulator wants is to use the simple word to kill a company, to withdraw a license, for obvious reasons. That how you remedy the problems, how you manage the liabilities to settle claims, how also you manage the impact on financial stability, because it may have the likelihood of creating confidence crisis within the sector. The moment they say one company is under, people will start to fear. Those were last year, we canceled 2 companies. And the journey was really a long journey. The companies had a problem with settlement of claims. One of them have issue of, is a purely financial problem. Its asset cover has solvency margin problem. And we tried all our best to the extent we did what we call regulatory intervention, to the extent that they don't spend a kobo without approval of the commission. We set time for them to invest, to inject more capital, find investors, all ended up unsuccessful. And you can't continue to wait without when there are liabilities filing up consistently, claims, and and the other one is the issue of investment mix. They have problem of liquidity. They have a claim of about over 10 billion claims, and but they have asset to pay those claims, but they are illiquid asset. And we gave them as long time as possible to be able to be liquid to settle is not possible. And we had to aim to the extent of canceling the license. And the law makes it is crafted in such a way that when you cancel a license, as a regulator, you have power, you are to take over the company or appoint somebody to take over the company, the running of the affairs of the company, appoint a receiver. And that's what we did. And the role of that receiver is as quickly as possible to realize the assets and also determine the liabilities so that you'll be able to settle claims and liabilities at the same time, as quick as possible. And based on priority ranking, based on the provisions of the law, you are to start to settle policyholders' claim before, even though the law says you start with the secured creditors, which is understandable. And then the next on the ranking is policyholders. And the policyholders then goes other creditors, then you go to the other liabilities, then you go to the employees, staff. The shareholders are the last at the bottom. And from experience, last year we concluded liquidation of a reinsurance company. And at the end of the day, even the shareholders got much more than their investments, because the receiver liquidator realized as much as possible and also settled all liabilities, and the excess went to. And also, we all know, I can mention name because the company is it's almost on the verge of final striking out of the name. Spring Life was a problem for the regulator at the time because every week we would receive a complaint, a petition on non-settlement of claim on the company. We did all, we send it, we give it to, say, another investor took over, but at the same, we continue with the same problem. Last, about a year ago, we had to, in 2011, we had to took a hard decision, cancel the license of the company. By mid of 2022, all the liabilities of the companies have been settled, all. And now we are in the process of finalizing, closing the case, which, as far as the role of the regulator, which is to protect the policyholders and do it in a such way that will not disrupt the financial stability. And that was a success story also. And we're optimistic this one will reach a milestone. But the challenge we're having is the owners, the former owners. Technically, when you say owners, when you have a negative shareholding, you can be said to be owner. But some decided to perhaps go to court to challenge it. So we'll see what the court will say. But we're optimistic the court will tell them, hey, you have to allow the regulator to do its work. So, the main thing, the main crux in most instances why those companies licenses are cancelled has to do with issue of claims and financial stability, financial solvency level of the companies. So the main priority perhaps is the policyholder. That's it. And on the issue of claims, I wouldn't know whether I should be happy. The chair of the subcommittee is here, or I should not be happy that he's here because he's a seasoned person when it comes to insurance matters and capital markets. So, Mr. Kamaraj. So, on the issue of the claims, the time frame within which to pay claim, unfortunately, is limited by law. The law defined it to be 90 days. That is time frame within which either to accept liability. If you are rejecting liability, you have to notify the claimant within 90 days. And where you accept liability, you have to pay within 90 days. But what we did, if you check our market conduct guidelines, is to encourage them to pay as early as possible, not to wait to say because I have 90 days. So what we did is now to make it part of the portal, in our portal now, which was launched in 2020, which is one also a recent development. Is the intent of that is to streamline the process, or how they file, how we monitor them. Real time, based on the portal, we will see when a new policy is taken, and also when a claim is lodged with an insurance company. And we will see when was it paid. And we are going to be publishing on our website the time, the idea of the average time within which each insurance company pay claims. And that is one of the key things that we have introduced now, that to make them pay as quick as possible. There are companies that perhaps that the moment they accept claim, within 2-3 days, they will settle claim. But at the same time, one of the things that gave insurance a bad name in the country is the issue of motor, especially the third party. People buy fake insurance. When they buy fake insurance, when there's a claim, why do you go and make your claim? Because each insurer will settle based on the policy he issued, based on the particular insurance cover he issued. So when you didn't pay, when there is nowhere to go, all you see is that insurance companies are not paying claim. And that perhaps not the correct presentation of facts. And but there are instances where perhaps you have a genuine claim by the insurance companies, and where an insurance company accepted claim, accepted liability, and the law says he has 90 days. If he didn't pay, the law provided a window that you now write to the commission and request the commission to pay you from statutory deposit, because the law requires them to maintain at all time at least 10% of their minimum paid up share capital. And one of the objectives of that that deposit is where there is a claim, admitted claim, not settled within the claimant can apply to NICOM to pay from there. And where NICOM authorized payment from, CBN will pay you directly. Where you are paid, the insurance company will be required to make good of the payment within 30 days. Failure of which then is a ground to suspend the operation of the license of the company. So that's a good protection for the policyholders. But unfortunately, most of our colleagues, they will run to court, which is perhaps, as a lawyer, I would say is slow, but this one is cheaper and faster. When you come to NICOM, you don't pay. Secondly, if you are lucky, quickly it will be resolved, and then you write, just attach the discharge voucher. When you attach this voucher, immediately we ask the CVN to pay you, or we ask the company why you didn't pay this claim. And in some instances, when we receive those kind of complaints and we write to the company to ask the insurer, why didn't you pay this claim? For them to tell us the reason why they didn't pay, in most instances, we will see a letter saying we have already paid now. See, attached is the evidence of payment, which is in the interest of the client that has been resolved. And that will not obliterate also that the lawyer has discharged his professional duty. And so that's how it is when it comes to claims, payment, and also time frame within which. But I assure my colleagues on the discussion on this forum that you see also a significant improvement based on what we're starting doing now on the portal. Because we see when a claim is, we don't have to wait for the 90 days. We will ask you, what have you done? And that's why we are migrating to risk-based supervision. So, and also we'll see when we publish, people are seeing that, because it's competition, people will start to go to where they know the claim will be paid quickly. But to be fair, the payment level of claims is reasonably good by the insurance companies. On the issue of the adjudication, the law requires the commission to establish a complaint bureau. The bureau is to handle complaints from insuring public, the insured, and also the beneficiaries to insurance contracts. Even if you are just a beneficiary, not the actual insured, like for example, life. So you file a simple process, and the complaint, there is a complaint form on our website. You can fill it, attach relevant documents, and then send to the commission. What the process we usually follow is we give a fair hearing. Open receipt of the complaints, we send to the company and to the operator and ask him to give us to respond. And when we receive the response, we receive very many types of response. One, some will receive the one that we say we have already settled it, see evidence after our letter. And that's okay. We have no problem with that. The second one, some will now write to us that we are going to pay. Some will give justification why they didn't pay. So we'll analyze, when we analyze why, especially where the reason why you are not paying, we would do 1 or 2, 3 things. One is either we'll tell the company that you have no justification, go ahead and pay. Or we said we will ask the insured, the complainant, to tell you the reasons why the insurance company said it's not paying, to give us additional. If he has given.
Okay, Doctor, I don't want to hold the floor because of time. There are other questions. Sorry.
Okay.
I get the gist.
We have a bureau that people can file their complaint, and will address complaint through that
bureau.
That window.
Bureau.
Yes, sir.
Thank you very much. And the three functions of the bureau are noted. Now, there are other questions in the chat room. I don't know whether you can see them. That some of them you have alluded to in your answers, but there is one that is interesting. I don't know if you want me to read it out to you. It says, it talks about domestic insurance business under Section 72 of the Insurance Act. And it says, can NICOM grant permit to purchase domestic insurance from a foreign insurer?
Yes, we do. Provided there is no capacity within the Nigerian market.
Within the Nigerian market, okay.
Yes.
And then there's a follow-up question. Who is required to obtain the permit? The insured, the insurance broker, if it's placed through a broker, or the foreign insurer?
No, mostly is the insurance company or the broker. Because in most instances, you realize you place the business with an insurance company, but because he has no capacity to cover the entire risk, he will look for co-insurance within the Nigerian market. And when he exhausts the insurance, the other insurance company, he will now apply and say, I want to place this proportion outside the country. Or the broker can apply, any one of them.
Okay, thank you very much, Doctor. Then there's another one from Ogene Chove, says here that, thank you for the insight. You mentioned the principle of large number.
Yes.
However, the increase in comprehensive motor insurance to a minimum of 5% will discourage the general Nigerian public who are not so inclined to take up such policy cover. Will this increase not reduce the number of people who are willing to take up this policy, thereby resulting in a negative reaction to what you were actually intending to? And probably, maybe on another session, we're going to have insurance companies to also give us the reaction that they have received. But as a regulator, what do you think?
Yeah, it may reduce the number of those who do not understand the value of insurance. That's just a simple answer. Because let's, for example, I have a car worth 20 million and I insure the car for 5% of 20 million is just about 4 million or thereabout. It's more money. And I know I can sleep well. I don't think about anybody stealing the car. I don't bother myself with getting involved in an accident. All those ones are not a problem to me. Those facts are sufficient. Like we used to say, Raju will say that you don't fire your security guard because there is no theft in your house. So people will say, I've never made a claim, so I'm not going to take it this year. It's like saying I'm going to discharge my security guard because there is no theft. I don't need him. And 5% of the value of your car is worth maintaining if you know the value. And with inflation,
exactly,
you need to have economic premium.
In most commensurate with the value.
The minimum is 10%.
Commensurate with value. There's another question that you had, which has been from Olun Shewe. regarding a point that you are raised. It says, I believe you mentioned a court for corporate governance matters in the insurance industry.
Yes.
Is this a court established in the usual sense of a court, or could you please signpost where one can find more information about this? Then it says the NICOM website does not contain a lot of information for users. The publications link do not appear to work. Maybe this is for your IT department.
Yeah,
and
this
we
one
might
I
want to
will
put
hand
it.
it over to my team and see.
Thank you. So
Yeah.
what about this court of corporate governance? For
Yeah,
corporate
we issued it as a guideline. And when we issued it as a
Okay.
guideline, it's binding.
Right.
And I believe it should be on our website, but I will check that up.
Okay, if you, Doctor, if you share it with us, we would also share it with the members of this committee and other insurers. Then,
yeah, I will share immediately after this session.
Hello, Doctor. Doctor, because of time and the people are at work, so
Yes.
we may not take further action, except to ask that what is the status of the law reform? Because you know the law we are currently using is somehow archaic for the kind of businesses that are being run. What are you doing in terms of law reform and getting a new law in place?
Yes, that the good news is that it has been laid before the House. It has passed second reading and they referred to the subcommittee on insurance and other related matters. They have finished their work and have laid it before the House, which we believe any time from now, if depending on those are areas that we have no control. But we are doing our best to try to lobby to see it, to see the light of the day. But it has been late already. So we are optimistic it will soon be out.
Thank you very much. At this junction, we have to thank you for sparing us time to attend this. I know you are a very busy person and very difficult to get. So for you to take this at a very short notice, it shows your passion and your relevance in the insurance business. Thank you very much, and we appreciate your. As we say, we are the insurance people who are intermediaries between the operators, regulators, and the public who are the beneficiary. So at a point in time, we'll be coming to you to get some feedback on some of the issues that you have. So don't be tired of us. I pray that we live long to have a very reform and robust economy. I also like to thank my all committee members for all their work and to get this one done. And our amiable chairman, Dr. Adeolu Adefulu, for his encouragement and his passion to ensure that we get to this finish line. Thank you very much. We also thank Mr. Rex Azubuke, our IT expert in the house, who has also been working tirelessly to get this thing done. We also thank and all other members working in the secretariat. Thank you very much. For today's participants, we are happy that a lot of people joined this webinar. It shows the interest that people have in insurance, despite the negative image that some companies have in the insurance business. We are in a turning point, and very soon, if we are able to get the insurance market well, it's more profitable than the bank, and our economy will grow far better than what we have now. So I encourage every one of us to take insurance policy as a matter of necessity because of the economy that we run and because of the situation that we can find ourselves. Thank you very much, everybody. And on this note, we'll bring the webinar to an end. Bye for now. Thanks.
Thank you very much.
Thank you very much, sir.
Thank you.